Everybody, it is Sunday, March 17th, 2019. Let's look at this market for the past week. It was an excellent week. If you recall, last week coming into Monday, I was looking at the market as guilty till proven innocent, as we were below the declining 5-day moving average. But we got above that, and the shorts got destroyed once again this year, adding to fuel further gains. Semis up over 20%, oil up 26% year to date. Let's look at these charts. So we had come in, of course, with the market below the 5-day moving average and declining. And then as we gapped above it, the buyers took control and held that control throughout the week. The volume weighted average price since that level was briefly touched on Friday. Buyers are still in control. Looking to next week, it's looking like this market is making a strong attempt to try to push through what has been an important level of resistance here at about, let's just call it 281.5 to 282 over the last several months. So if it can do that, it looks like it's poised for the next leg higher, and it's just as simple as that. The NASDAQ is leading this market here this past week. As you can see, it's broken past its band of resistance, and again, a little shakeout in here. I was calling it guilty till proven innocent under that 5-day moving average, as I always will. But when we get back above a rising 5-day moving average, it's back to the buyers in control, and they maintain that control. And to try to short it is a fool's game in this market right now. It looks like it should continue to move higher. We have to be aware of where it's come from this week, 169 to 179. So it has expended some energy, a little bit of consolidation, pullback wouldn't be a surprise. But the benefit of the doubt goes to the buyers without a doubt. The Russell 2000 did kind of, we were looking for it. This market also, as guilty till proven innocent back in here. Buyers took control. They're now holding the 5-day moving average. The more important level for the near term will be 154. If it fails to hold 154, maybe it does head back down. So be aware of that. It is trapped below the 20 and the 200-day moving average. But if it's to spend a little bit more time consolidating above that and then break 156, I think that this market will have healed this pullback and could continue to move back up towards the highs of this year. Semiconductors have led the market higher. Again, this year the semiconductors are up 21.7% after last week's 5.2% rally, and that is a new recovery high for this group. And perhaps they're heading for the highs up near 112. The point is, the buyers have regained control, and when they do so, to try to fight it just makes no sense. The biotechs are, actually pretty impressive the way they've come back. I was thinking that we were in for a possible bigger move lower because we saw this failed breakout. But we've actually recovered very nicely off the 50-day moving average. And, of course, we're above a rising 5-day moving average in the volume-weighted average price for the week. So higher highs and higher lows. The one thing, again, to just be aware of, not concerned, but aware, is that we are getting a little bit extended after this week's gain. So perhaps, some pullback consolidation is in order here. But again, overall, the benefit of the doubt goes to the buyers in pretty much all of these markets. The financials still fighting with that 200-day moving average. So you can see they came down to the year-to-date volume-weighted average price, back up to the 200-day moving average. Maybe they consolidate a little bit before they're able to sustain a break higher. But again, buyers remain in control. Energy names, got up to the top end of their recent range after testing the year-to-date VWAP. And look how important the year-to-date volume-weighted average price has been for that group as far as support. Now it looks a little tired here, so just be aware. Let them settle down for a couple days before you decide it's time to either, before you do anything with them, basically.